Hello there everybody, a very, very good afternoon to you all and a very happy new year and welcome to 2025 here at Taurex, and this is another one of our first live trading session here for you today. I am under the weather. Everyone's got this flu that's going around. It's hit me. My voice is recovering, so if I do sound a bit croaky or I start coughing, then I do apologise. Again, a very happy New Year to you all. Hope everyone enjoyed their Christmas break. This is a recorded session. So today we're going to be looking at the 2025 markets, of course. Now we're into a new year, and for this particular session, we're going to be looking at the best Forex trades for this year. So normally we do a daily live stream every day, and that will continue from next week. But obviously over these last couple of weeks, the markets have either been closed or not moving at all. And so I thought it would be good to come on and record a couple of, or three 2025 outlooks. I think we do Forex today. On Monday, I think we're going to be doing indices and crypto, and I think on Tuesday it's commodities. But everything, all the announcements on that are in our Discord channel. So make sure you're on our Discord channel, and we will be building that this year. So hopefully we can get a nice community built up in our Discord channel for this year. If you do have any questions on the markets in general, then feel free to, as always, put them in the put them in the chat room, and I will answer those questions for you, no problem. Okay, right. So brand new year, brand new opportunities, of course. And what's important to have a quick look at is that for the remainder of this week, obviously it's a bit of a strange week as we head into Thursday and Friday. We haven't got a great deal of economic data out, so we don't need to worry too much about that. We have got ISM manufacturing PMIs out on Friday, which is probably our first lot of high impact news events that come out. And then next week, we're sort of, everyone's back into the office, all lethargic, and everyone is, and the data starts to come in again. So this is a good time over these next sort of 3 or 4 days to really start to plan what you're going to be doing for 2025, what sort of themes you're looking for, and what we're expecting and what I'm expecting from the markets this year. So for today, as I said, we're going to be looking at the Forex market, and then we'll move on to the other things next week. So where do you start? Well, first of all, I've been doing 2020 New Year streams or videos for quite a few years, and in my experience in doing that, it's difficult. Okay, so what I mean by that is, as a trader, we need to be able to be ready to adapt to a changing environment at any time, because predicting what's going to happen in the year, where there's so many moving pieces, there's so many things that we're uncertain about. I could just reel a couple off the top of my head. What's the situation going to be with the war in Russia and Ukraine? Who can predict that? You can't safely say that it's going to stop or it's going to be heightened. Who can safely predict what the Federal Reserve are going to do? Because obviously the goalposts move all the time with the data that comes out. I can't predict every inflation print that's going to come out in the year. So I can give you what the point of this is to have a rough idea, just to get us set up for the year about what sort of things and what sort of themes we need to be focused on and what to expect. But what's important is we don't hang our hat on that prediction, because what we need to do as a trader is we need to be able to adapt as the year goes on to anything that changes, whether inflation suddenly starts to fall, whether the job market starts to fall, like the job strength starts to fall, anything like that, we need to be on the ball for. But I can give you a rough idea of the sort of things that I'm looking for this year in the Forex market. So over in our Discord channel, as you can see right now, I've actually just released something in the general chat, and if you are in it, then this would be a good one for you. I've put together a list of the 2025 outlooks from basically the biggest names in the industry, JP Morgan, Morgan Stanley, Goldman Sachs, HSBC, and every year they always release their outlooks for 2025 for like the equity markets, for the Forex markets and stuff like that, and commodities markets as well. Some are more geared towards a particular asset class, and some are geared more towards something else. But I've put together these ones because I've had a read of them all, and these are the ones that are the best ones. So throughout the 2025 outlook streams that we're going to be doing, we're going to be referencing this, because I obviously want to know what some of these big guys are saying. So it's important that we take a look at that. Of course, you can get bogged down in as much of the detail as you want. However, I've done most of the groundwork for you. So one thing I would say is if Morgan Stanley's, you can actually listen to a 10-minute like voice note video type thing, transcript thing. So that's a good one. If you want to have a look at that, you can actually listen to that on Spotify as well. So that's what Morgan Stanley think about the markets this year. Let's have a look at what JP Morgan think. And I always know that the sort of what to expect and what to read in these 2025 outlooks when you read the title and it says many moving parts, which basically says to me there's a lot of uncertainty going into this year. So if I just go Control F and go to dollar, you can actually see that, or Forex, you can see that in the JP Morgan one, when I type that in, or US, let's have a look here. So when it comes to the cross currents of taxes and tariffs, prior to the election, the US economy appeared to be moderating as pandemic-related household savings were on the rundown, and there was some underlying strength in the US economy. Remember, what I'm doing right now is I'm looking for signs that are going to shift the Forex thing. So if I read and see things like strong US economy and strong predictions for US economic growth, then I know that what I'm looking for is some dollar strength. But if these outlooks are pointing more towards a weakening in the US economy or in other economies as well, I know that means potentially we're looking for some weakness in the currency. Additional stimulus will push the US fiscal deficit to extraordinary levels. So you can see that they're expecting some more stimulus here. I'm just seeing if there's anything that's like related specifically that we can get an idea of what will happen with the US dollar. Not probably the best one for it. I know that HSBC had a good one. Excuse me. So HSBC actually had a particular section for currencies and commodities. And they say, as we anticipated, the US dollar is well supported in Q4 by elevated US Treasury yields, stronger than expected US economic data, and lingering global uncertainties. The post-election reaction was also positive, as a strong US dollar is one of the typical features of the Trump trade. As we enter 2025, we believe the market will be looking at the direction of yields, economic momentum, I believe that's a big one as well, economic momentum, and risk sentiment to determine the currency's relative performance. While the global policy rates are expected to drift down, the US dollar will remain one of the higher yielding currencies, which makes it attractive. So they're quite bullish on the US dollar, you can see that. The US economy's outperformance may be another source of support, and as tariffs add to uncertainty in our multipolar world, the US dollar may continue to see some support from its safe haven status. And then you can go on to read any of the details about that. Let's have a look at some of the other currencies as well, because this is my favorite. This is my favorite one when it comes to a Forex outlook for this year. With this in mind, we consider USD as one of the most attractive currencies given its high steady US yields and supportive US economic policies. On the other hand, we consider Euro, Swiss franc, Japanese yen and New Zealand dollar as the most vulnerable, and we see limited upside risks in the coming months. The Eurozone's political concerns have risen lately. Sorry, my chest is really bad. To tariff risks and Germany facing an election amid sluggish growth. The pound and the yen and the Swiss franc remain vulnerable to low yields compared to the US, although further easing from the Fed could curb this trend. New Zealand's economic context is a concern for the New Zealand dollar, so they're quite bearish on that as well. And you can read into that into more detail as and when you like. So when I read that report, and there's other ones as well, I don't need to go through them all. I recommend that you go through and read them. You've got Goldman Sachs, and I've read through them all. The US dollar started the year on the front foot, and as you can see, because I'm on a weekly time frame, it wouldn't surprise me if our initial target for this year was up at 114.8. Now, of course, there's a lot of factors that need to be met here. But as you can see, this is a market which, had a brief pause really from September or October down towards 22, end of September 2022 down towards January, and we were trading within this range where you can actually see that we had a breakout. We're now seeing this breakout, so it makes sense for me that the next leg higher is up to 114.8. If I go to the where did we start the year in 2024? This is the US dollar. Where did I start the year? Here. Let's just call it here. So the US dollar had a positive year in 2024. Say we close the year, and I'll do there. So the US dollar started the year up at around 101.4. We traded higher until June. So we had a positive first 6 months, and then the US dollar fell when we were pricing in lots of rate cuts. And then when those rate cuts started to be priced back out again, we saw, the biggest surge we've had in the US dollar. So when it comes into this year, again, we need to manage expectations. Do we expect that we're just going to see a one-way ticket, up to the moon? No, because there are still potential rates coming. But the story for the first half of this year, in my opinion, is going to be about how much more inflation's ramping up, and not necessarily about a weakening US economy. And what you have to remember is, even if the US economy is, slowing down somewhat, you've got to compare that relatively to other economies as well. And I think there's more risk of more downside in the Eurozone than there are in the US economy. So that will keep, I think, broadly the US dollar strong this year. So that's something that I'm looking for this year. So again, if we look at the current pricing at the moment, if we drop that down or even onto a monthly chart, you can see what's happened here broadly. As technically, there's been a surge higher. We've had a pause, and this could be the year if inflation ticks higher and it's people start to be a bit more concerned about inflation. I could see the US dollar maybe making a move up to 116, maybe even breaking above 116. So for the first half of this year, I think we can target 116. From there, we may get, it's not just going to, travel in a straight line. We may see a bit of a pullback again, and then maybe towards the end of this year, we can look to buy up some dollars once more. So overall, pretty bullish on the US dollar at the moment, because the current situation here is that rate cuts are being priced out and inflation is now becoming a concern. That reminds me of 2022 when we saw that. Okay, good stuff. Right, now then, how would we trade that this year? Well, you got to remember that what this is doing for me is it's giving me an idea of the sort of bias that I'm looking for when I go onto the charts for this year. So as long as that's what I've just said there remains the same, things don't change. Because what could happen, for example, is the US economy could really start to, or the economy as a whole could start to, the jobs market, for example, could start to tail off quite significantly out of nowhere, right? And then we'll be talking about interest rate cuts, a lot of interest rate cuts. That wouldn't be supportive for the dollar. But at the moment, as it stands right now, with the data and evidence that I see in front of me, the risk here is more about inflation and the fact that rates will need to be held higher for longer rather than cuts. That continues to support the view of a bullish US dollar for the first half of this year. So it goes without saying that when it comes to any trades that we manage to get in, not necessarily today or tomorrow, but over the first couple of weeks of January when the market starts to kick in again, for me, this looks like another leg. See this? Pause. We could be shaping up for another leg lower here. So at least down to the 1 level, maybe even down to around this 0.9 level on euro dollar. I'm using the HSBC and other outlooks to try and get the best pair to trade this against. So I like the euro dollar. I also like the USD versus the Swiss franc because of what they said. And if you remember last month, the Swiss National Bank cut rates by more than expected. So it took quite a dovish shift. You can see that potentially there's room for a move up towards these equal highs this year. 1.01. These are obviously, quite large moves, which are on a monthly time frame, because obviously I'm looking at the year as a whole. And what I do is I like to keep that yearly target there. So if I do manage to get on a trade on, say, the 4-hour or the daily time frame, I can maybe leave a little bit of that trade open if it goes in my direction to target my yearly target and make a real massive, yearly trade out of it. So I'm going to put in here as our yearly target, because the evidence right now is pointing for some USD Swiss franc upside this year. And the other market, which is a bit more of an interesting one, is obviously this USD Japanese yen market. So I'm looking for any evidence of downside to trade this market higher. I've still got this trade in at the moment. It sits at this 1-hour demand zone. It sits at this 61.8% Fibonacci from this move. It's looking increasingly like we may not get that. So we're sort of still because obviously the markets are still quiet at the moment, so we're still in this sort of holding pattern. But again, I don't want to remove those joins actually. When it comes to USD yen, unless we're going to see some more intervention from the Bank of Japan, that's why I think this one's a little bit more of a risk, because we could see, if we do get some more considerable weakening in the Japanese yen, then we may see some more intervention or threat of intervention from the Bank of Japan, and that may cause, quite an aggressive move lower. But generally, this is a market which keeps being bought into, and yeah, as we can see a move up to 162 as our bullish target for the dollar yen. And finally, for NZD USD, we are at risk now of a considerable breakdown lower. You can see how we closed December. Very bearish close in December. These lows are hanging on for dear life. I don't think it's going to be too long before we get a breakdown to 0.5 in this New Zealand dollar versus the US dollar, and maybe even down towards this low here and this wick as my sort of yearly target, down towards 0.489. So if I was to summarize the key points when it comes to looking for Forex trades this year, number one is that the threat at the moment, and this could change, is that the Federal Reserve are going to be playing the higher for longer game, right? Which basically means instead of not increasing rates, it basically means keeping rates at the level that they are for a longer period of time than what the markets were expecting. And if that remains the same, coupled with the Trump trade, of course, and the tariffs, etc., that supports a US dollar bullish view as a whole. It's not going to mean that it just moves in one direction, and I'll say that all the time. Markets will trend, right? So that's given me my overall view. It means that we can try and target those yearly targets if we do manage to get in. And my favorite markets to trade that with are the dollar. Obviously, the dollar is what I'm looking at. The euro dollar downside, the New Zealand dollar, US dollar upside, the USD Swiss franc upside. They're the three things that I'm really looking for this year. Hello to you, Bobby. Happy New Year to you. Later. That's no worries. No problem that you're late. I'm pretty much just wrapped up some of the things that I'm looking for in the Forex market this year. Okay. So, rewatch it. This is a recorded session, so people will be rewatching it a lot, I imagine. And so overall, I think the US dollar remains attractive this year, and I like it against those currencies. If we do get a situation where the data starts to come in a bit weaker, okay, and we'll know that after the first few months of the year, what the data's looking like. The jobs data starts to sell off slightly. What will happen is the expectation of rate cuts will come back into the markets, and therefore we could see some dollar downside. But as I say, overall, the view for me is that the US economy is strong. Even if it is slightly weaker, it's not as weak relative to, in my opinion, like the Eurozone countries, or Japan, or New Zealand. And so when you think about that relatively, although it's a weakening, I think that there will still be demand for the US dollar broadly this year. So I remain bullish on that. And we've had a really nice technical breakout on higher time frames, which is a real indication of strength and what I expect for the next few years. Next few years? Next few months. Okay. That would just about do it for the Forex market for this year. Thank you very much for tuning in. I'm sorry if I sound horrific. I don't feel very great, to be honest. But we did manage to get an initial idea of what to expect this year for the US dollar. I'd recommend going through and reading some of those, some of these big bank predictions. They're not always right. Often, actually, they're quite wrong. As I said, the main thing here is there's a lot of moving parts. So although you can have an early prediction, things can change very quickly. So we need to be ready to adapt to that. But initially, I think we could be good for some early dollar strength trades this year. And that's the main thing I wanted to focus on for today. Okay, good stuff. Thank you very much for tuning in today. Take care. Trade the session well. There's not too much going on, but next week the markets do come back. And the volatility will start to creep back into the markets. So obviously we'll be there to take advantage of that in our daily live trading sessions. I'll see you all on Monday for another 2025 outlook for a different market asset class. So do come and join me then. And I hope to see you all there. Trade well, trade safe. I'll see you soon.